Hello and welcome to another update video about ADA. ADA hasn't really done much in the last month or so. It's nearly 2 months now, 1.5 months. ADA has been not only moving in a correction, because the correction started middle of March. Oops, let's delete that. Middle of March, but that's that's okay. We've come down into this support area in yellow for our wave 2 correction. But it's really become very, very boring. And that's what we can observe on many crypto charts, because the market is just moving sideways in a tight range. And it's not that tight, but it's between 41.9 cents and 52.2 cents here, this price range. And there hasn't really been any breakout or anything, no breakout. Well, the last breakout attempt was here around the 20th of May, but the price failed to follow through, has dropped back into support. I did add a micro support area, possibly to indicate that, if we can hold that micro support area, the price might attempt another rally from here. However, so far that hasn't happened. And what is more reliable than this small micro support area is the larger yellow support region with 4 Fibonacci levels to watch. The upper one is already broken, which is not a surprise in a wave 2, but the 50% is still holding. A very common target for a wave 2. The market reacted to it a couple of times here. That level is at 42 cents. Breaking below it is also indicated by the red line, because that's also structural support. So breaking below it would indicate that we're heading down to the next downside target at 36 cents. I'd say 36 to 38 cents is the next downside target range. We have not yet reached it. We're still hovering, let's say, between the 50% retracement and the 38.2 retracement levels. But any break below 42 cents, 41.9 cents should send us down to 36 or at least 38. But when we break below 1 Fib level on that main Fibonacci scale, is likely to get to the next one. Below 36, we've got 29. And below 29, I haven't got anything clearly bullish left. Then we are in no man's land. This is the level that normally a wave 2 shouldn't break below. Well, sometimes it does. I'm just surprised how straight I could draw that line just by using the mouse. Wow. So impressed, didn't think I would be able to do that. But no man's land, okay, below that area here, between 29 and 22 cents. Why? Because probabilities shift from a bullish setup towards something more bearish with a sustained break below the 78.6 retracement. But it's not invalidated, So traditional, or let's say just the Elliott wave rules, state that a wave 2 can retrace 99.9% of the wave 1, and that is this level here. If we say the wave 1 to the upside, this 5-wave move started in June, it's the 22 cent level, but probabilities already shift more towards the bears, towards the side of the bears if we break below 29 cents, and therefore I call that no man's land. You normally don't really want to be there. Bit unclear then probability wise. At the moment for me, the main question is, because I've got my thesis, okay, so 29 cents is my key level, but what I can't tell you if we are holding 42 cents or not. It doesn't look like it at the moment because the market is fairly weak, just moving sideways. But as long as we're holding 42 cents, the orange scenario is still a, let's say, reasonable perspective. It's speculative, but it's also a reasonable perspective where we can say that we have started to move up in a diagonal pattern. It just doesn't have any upside momentum at the moment. Therefore, it is highly speculative, and nobody should be surprised if we get one more low. And I think one more low, if it's needed, it's needed, and without red candles, corrections typically don't finish. So maybe we need that one final flush out. Which levels need to break to confirm that. We just talked about it. And to the upside, the market should stay obviously below 52.2 cents to keep that a valid perspective. I did mention to you in the previous video that the white count is obviously the one that allows for one more low. In this scenario, we could be in a wave 4. Whether the wave 4 is a triangle, as I've shown here, which might just need one more slightly higher low, or lower high, or if the wave 4 is a bit more complex, that's not so important structurally. Important is to know, okay, there is a resistance area for wave 4 above 52.7 cents, which is sort of a separate fib level just for the resistance. Yeah, something different is likely playing out, and it could then be the orange count or a larger corrective rally, but not a wave 4 anymore. So to keep this as a wave 4, yeah, we shouldn't break above 52.7. Now, I did tell you 52.2, but it's a sustained break above 52.2 because that's this swing high from April. But really, from a Fibonacci resistance point of view or retracement point of view, the wave 4 should stay below 52.7 cents. Okay. So yeah, these are really the key levels. There isn't really much more you can say here within this range. We just need range breakout. So support either holds or it doesn't. And if it doesn't hold, we hit the next fib level to the downside. But yeah, looking at the bigger picture, this is currently seen as a corrective pullback. And I'm looking forward to a potential third wave rally to the upside, but we'll stop looking for it if there is a break below 29 cents. So yeah, not much more to add really. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.